Good day, everyone. This is your European Open briefing for Monday, August 8th. My name is Michael Trentiades. I'm the Chief Economist here at XM.com. These are the key points to know this Monday morning. Non-farm payrolls out of the US have boosted December rate hike hopes. The dollar is holding most of its gains from Friday. Stocks are also up while gold is down. We had the Chinese trade surplus earlier today. It grew, but that was due to falling imports, so not as good news as maybe would have been hoped. The Aussie is holding on to 76 US cents, so we have a strong Aussie. And on the calendar, we have Eurozone Centix investor sentiment for August and US labor conditions later. We also had German industrial output not long ago. The focus on the week ahead will be on the Reserve Bank of New Zealand, on various Chinese data points, and US retail sales on Friday. On to payrolls, we had a very strong number on Friday. For July, we had 255,000 new jobs. 180,000 was expected. The unemployment rate remained constant at 4.9%, but the labor participation rate was ticked up from 62.7 to 62.8%. This is the percentage of Americans either working or looking for work, so we want that as high as possible, obviously. And average hourly earnings were at 0.3% versus a 0.2% expected. That was that was one of the more significant surprises, because as you can see from the chart, now the year-on-year growth rate in average hourly earnings is touching on 2.7%. So breaking out of that 2 to 2.5% range, which we have seen for the past 3 years, would be a very significant development for the US labor market, and we'll have to see if that will stick. And this data was very encouraging, particularly after the week before we had weak GDP numbers and a Fed statement that was on the dovish side. What happened? This is from the CME Group website, the Chicago Mercantile Exchange, the futures for the December Fed funds rate, and we can see that the probability of the year closing at steady rates was 67.9% on Thursday, and after the Nonfarm payrolls, it fell to 56.5% more or less. So the chances of a rate hike went up from 33%, let's say 1 in 3, to now around a 45% chance, so over 40% chance of a rate hike by year end. So this is significant. This in turn boosted the dollar index to rise above 98. It's worth noting that dollar yen is above 102 right now, helping the Nikkei, the Japanese stock market index as well, and euro dollar is trading in the 110 to 111 range. Now, payrolls were of course favorable for the US dollar, but they are not really a game changer, as the Fed is not seen as moving in September. I think the market is giving a September move a 20% chance, and for the Fed to raise in December, things have to go just right between now and then. So of course they are likely to rise in hike rates in December, but things have to go more or less as planned. If there are any negative surprises, they might delay the rate hike again. On to China, you see with the green line is the country's trade balance. You're seeing a rising trade surplus, but what do we see here? We see a drop in imports, bigger than expected drop in imports, around 12% drop. So Lower imports mean things are not looking very good for domestic demand. The yuan, Chinese yuan also dropped a little, and the Chinese reserves during the released during the weekend fell in line with expectations. So exports fell, but because of imports fell more quickly than exports. You see here exports, you see here imports. Imports falling faster. You see a rising trade surplus, and basically you want to see a trade surplus because exports are rising, not because imports are falling. The Aussie was not much affected by the Chinese numbers. You see the Aussie was going into non-farm payrolls was around 76.6 cents. It has been holding on to the 76 cents level, and the surprise rate cut from the rate cut from the Reserve Bank maybe wasn't such a big surprise, but the rate cut from the RBA last week did not hurt the Aussie much. This is just a slide to show you that the orange line shows the S&P 500. It closed at record highs. It shows positive risk appetite, but of course this positive risk appetite and renewed dollar strength took a significant toll on gold, which dropped from the $1360 an ounce area to the 1330 area. On to today's data. Japanese current account earlier was a bit worse than expected. German industrial output was better than expected, and the prior month was revised not as negative, so overall that was very positive news for Germany and the euro. And we have the Centix investor sentiment from the out of the eurozone, and also the employment trends in the US. But basically we are watching for tomorrow. We want to see the Chinese inflation as well as UK manufacturing. So that's all from me today. Thank you very much for watching, and have a great day.